Okay, so let's start over again since we just started recording. The first thing that you guys should start with every week is looking at your economic calendar, right? This will give you guys a set day and time where you can look for manipulation or distribution which you can use to trade with. Pre-planned market moves. Essentially, core, PPI, CPI, all of these, the labels that they give these market moves or red folders are just smoke screens, right? The reason why the market moves at these times is because it has to. It's an algorithm. It must move at these times, right? But just to make it seem quote unquote organic, they do this, right? So next week, Monday, or tomorrow, Monday, then Tuesday, Wednesday of next week, of this week, we can expect Monday to be slow and Tuesday and Wednesday as well to probably not give us the clean price action that we would like to see because there is nothing hinting to that. We can expect Thursday to give us a good enough setup that will probably run into Friday, the same direction, the opposite direction of which the market manipulates on Thursday. So we can expect Thursday to be reversal already based on this alone. Okay. Today I'll be going into the times which correspond with each cycle of my quarterly theory. I've never talked about this before, and I know that some of you guys are going to take this information, post it on Twitter, post it everywhere. I don't think you should do that because this information is not common knowledge. No one really knows the actual times to use for each cycle. Some people use the 1 minute time frame for the true day open, and they do not really understand. So I think you should probably keep this one to yourself. All right, it's very simple to get to grasp, and you'll see that right now. So I'll start from the yearly cycle. For the yearly cycle, the right time frame to use for the yearly cycle is the weekly cycle, right? So for the true year open, you need to be using the weekly time frame for it to work to its full effect. For the monthly cycle, obviously you will need the true month open. And the corresponding time frame to use would be the daily time frame, right? For the true week open, or for the weekly cycle, you will obviously need the true week open. Please write this down. And for it to function to its full effect, give you the results you really want to see, help you actually trade, anticipate market moves, you will need a 4-hour time frame. Hopefully you're getting what I'm saying. If not, just write this down and we will be digging deeper into this, right? For the daily cycle, when trading using the daily cycle, you will obviously be referring to the true day open as you will be referring to the true day open in regards to finding setups. Above true opens we get bearish, below true opens we're bullish, right? That's literally how it functions. For the true day open, you will need the 1 hour time frame. Yeah, now we're getting, we're getting a little bit deeper, right? So these are the correct time frames to use. Go into your charts, back test, tape read. Even today, go into your charts, you can look. So if you usually trade with the 4 hour time frame, then you will be focusing on the weekly cycle, right? And we'll go a little bit deeper for the true session open. Of the 90-minute cycles, right? In the famous 90-minute cycles. You will need the 5-minute time frame. So this is what I want you guys to be focusing on at the moment. I will give you guys lower time frame cycles and higher time frame cycles as we go along. But these are what you really want to focus on right now, okay? If you like 90-minute cycles, you like trading the London session or the New York session, then the 5-minute time frame is your friend. And this is how you do it. I promise you, if you go into your charts, you will see these things repeating. You will see time frame. You will see the time frame synchronization perfectly. I'll give you guys some time to... No, I don't need to give you guys some time to take notes for this. It'll be recorded, so you can't just pause it afterwards. So I'll be introducing the defining range to you guys today. So defining range is located in the first quarter of each cycle, right? The defining range is located in the first quarter of each cycle. According to quarterly theory, you should omit the first third of Q1. So this is Q1. But to get a more accurate reading on the following quarters, if you guys will understand what I'm talking about right now if you watched the YouTube video, and hopefully you did. If not, please watch the YouTube video that I put up for free before you come to this video. Q1 can be split into thirds, right? There are 3 thirds in Q1. Omit the first third. So don't want to be trading, you don't want to be focusing on price at all until the second third of the first quarter begins. Hopefully I'm being clear right now. So T2 and T3 of Q1, which is the second and the third, that's what you're going to use to predict what Q2 is likely to do. Right? It's the same thing as I talk about in the YouTube video, but now we're getting a little bit more precise, because if you use Q1 as a whole, then you are not likely to get as an accurate reading on the other quarter as you would if you just use these two. You understand? We'll get into this more. So if this isn't clear for you, don't worry about that. Another thing to know is that Q1 usually functions as dynamic support or resistance according to its the proper time frame that algorithm synchronizes it to. I'll go over this probably during the center of this week, but for now I'm just giving you guys an idea of what we'll be going through. And someone's asking, Q2 is always the true open. You need to watch the video, right? Please watch the video on my YouTube channel. I don't want to be going through things that you guys already know. So Q1's opening gap, doesn't matter which time frame cycle you're looking at, it functions as dynamic support or resistance, right? So there are times when the opening gap of Q1 will overlap with the fair value gap, and that will be a high probability fair value gap. And there are a lot of high probability fair value gaps that you will learn. So this is the opening price of Q1 this year, January 1st. So if price was to either go below this, take the liquidity here, and go above, then this would serve as support, sending price higher to get these highs right here. Opening price, yearly cycle right here. Ultimately, due to the fact that this is also the true open of the quadrennial cycle, if price goes below this low, below the true open of the quadrennial cycle, and rallies higher, probably breaking this high, then we could probably be looking at where the low of the 4-year cycle could possibly be forming. So for now, there is not a clear read on price, as January's usually give us, right? Okay, so for some of you that are new, and even for some ICT charter students, for some of you that are really experienced. I'll now tell you guys when to expect consolidation, the times that you should not trade. I think I've done this already on my Twitter account, but I need you guys to take note of this so you can understand price action better. The days that you should not trade are after holidays, prior to CPI, NFP, FOMC, and rate announcements. So again, you do not trade after holidays. You do not trade prior to CPI, NFP, FOMC, and rate announcements. In regards to sessions, any sessions would follow one where there was a large range or a large price swing, you do not want to trade then, but you want to trade the one that follows. 90-minute cycles for some of you that like trading 90-minute cycles. If Q1 expands, then you should expect Q2 to consolidate, as I've said in the YouTube video, but I'm saying that right now again, just to try to drill this into your heads, right? I need you guys to understand this. I'll be talking to you guys more frequently this week. So we'll probably be talking again Wednesday and Friday, right? I have a few topics that I need us to touch on. So yeah, we'll be doing that. I'll talk to you guys again. Please take note of the things that I just talked about there. Like, this information is worth a lot. Please don't share it. Just that alone, you'll see, go into your charts and the video that I posted on YouTube, just plug these time frames in. It seems simple, but no one knows this, right? But, well, you guys know now. And it's, you know, I don't like to see when this information is just, up on Twitter, people claiming that they found it and stuff like that, because I didn't really have to talk about these things, right? So even now I'm trying to weed out the people in here that are trying to share the things that we're talking about here. I worked really hard, over 4 years trying to find all of these things. So I really much appreciate that. You don't need to sell this information. You can just, use it, trade it, and yeah, that's it. So I'll talk to you guys again. This will not be our last live stream for the entire week. We'll be doing analysis tomorrow in the evening, same time, my time, 6 p.m. We'll be going over all markets, stocks, cryptocurrency, Forex, and futures. Until then, have a good day.